I'm Matt Bichard here in New York City for Nareit's REIT Week, the 2018 Investor Conference. Joining me today is Nelson Mills, President and CEO of Columbia Property Trust. Nelson, thanks so much for joining us.
Thanks for having me, Matt.
Now, within your core New York, San Francisco, and DC markets, you target specific submarkets that you feel give you the best growth potential. Can you talk about what you're looking for in these submarkets and how that approach benefits the company in attracting certain types of tenants?
Absolutely. So let's take Manhattan, for example. We focus in the Midtown South markets primarily. Our target tenant profile is the TAMI, Technology, Advertising, Media tenants. That's where much of the growth has been in Manhattan and really in most of the major markets across the country. In DC, our focus is on inside the district, on the East End, elsewhere in the district. And in San Francisco, it's both south of Market Street, on Market Street, and just right in the North Financial District. But again, similar drivers. These are markets that attract the millennial employee base, which is much of the driver today for office leasing.
And building on that, can you talk about the trends that you're seeing in terms of lease renewals and rates?
Well, it varies greatly by market. So DC continues to be a bit soft. Demand is strong, but there's been a lot of new supply for the last few years. So that's softening rents and increasing concessions. So net effective rents are down in DC and have been for some time, but it's improving. That supply is getting absorbed. San Francisco is stronger than ever. Supply has been absorbed. The demand is stronger than ever, and that's reflected in some very strong rates and terms. And then Manhattan's in between. There's been a bit of a softening in rents, net effective rents, a bit more concessions across Manhattan. But overall, it's holding up. And Midtown South, where we're focused, has been particularly strong.
And now lastly, can you talk a little bit about what you're seeing in those markets regarding property pricing and how that impacts your decision on selling or acquiring assets?
Well, all three of these markets continue to be very liquid markets with capital demand from all over the world, both private capital, institutional capital, foreign and domestic. So even in DC, for example, where rental fundamentals are softer, we still see very competitive pricing there. It makes it difficult to buy deals there. Manhattan, maybe a bit softer. Some foreign capital has pulled back in the Manhattan market, but still very strong capital demand there as well. And again, San Francisco is stronger than ever, driven by the leasing fundamentals we just described, but very competitive market there as well.
Nelson, thank you so much for joining us.
Thank you, Matt.
For more from Nareit's REIT Week, be sure to visit Nareit's website, REIT.com.